Alright, want to do a video here looking at the S&P 500 futures. This is going to be ticker symbol ES, and then we're also going to be looking at SPY, ticker symbol SPY. But really a wild week this past week, and I was busy traveling over the course of the last week, so I didn't have a whole lot of time to trade in the markets, but wanted to still kind of unpack what we saw have happened last week. And just look at the charts and see where we're going to be moving forward as we continue to combat the coronavirus, and how the market is taking that. So, just looking at the chart, just looking at the futures chart here, we can see that we are now on this decade-long, 12-year-long trend, or 11-year-long trend, dating back to March of 2009. And you can see, that we've hit it a couple times here. Nothing too major. We got close in late of 2018, if you recall the decline that we saw there, which was then met with interest rate cuts, and that basically sparked the market back up. But now here we are again. We actually tapped it late on Thursday and Friday, and it's interesting to see we hit that mark and we rallied back up. A lot of that is also due to the Fed pumping money now into the economy, and Donald Trump had a speech on Friday late in the day. I think it was within the last hour to 30 minutes of the trading session on Friday, where he said, that the coronavirus is now a national emergency, which kind of opens up the federal government's ability to provide money to the economy to help combat this issue. So they stated that they had $50 million, or $50 billion, dollars that they were going to use to help the economy basically recover and not recover because we're not necessarily in a recession yet, but to keep it a little bit more stable and keep it from crumbling further, I guess, is a good way of putting it. But nonetheless, I wanted to start on this long-term time frame here on ES to show that and depict that we had actually tapped onto this 11-year-long trend. And when we move it in, I'll actually keep it on the weekly here, but when we move it in, we can see some pretty definitive levels. Just looking at roughly the $2,600 price point. And then we also have a level up here. I would say right in the high 2,700s, close to 2,800, as we saw a top here, a couple tops in 2018, late of 2018, and we sort of bounced. This is why I'm leaving it at the high 27s. But we bounced right in the mid to high 27s in the mid part of last year, and then we also saw a couple tails touching it towards the latter half of last year before we started this big run to the upside. And then I also have in here the mid 28s, mid to high 28s, around 28.75. You could also put in here around 29.50, but to me personally, I'm not sure if we're going to be reaching those levels at any time soon. But if you want to just mark that down just to be prepared, because we are having these massive swings from day to day that could really it's just phenomenal, the volatility that we are seeing and these percentage changes that we are seeing on a day-to-day basis. Those are some levels here on the futures. I'll go ahead and pull SPY up on the screen. So this is what most people are going to be trading. Again, I like to use the futures. It's just a little bit of a cleaner chart, but I can show you guys that same trend that we would be looking at as I go off the screen. And I'm doing this mainly off of this right here. This initial drop that we saw in the latter half of 2011 as my first pinpoint, and then you can see we tap it again, got close to it, and then we tapped it right here. But on the weekly, some notable things here on SPY to pay attention to is the fact that we have broken down through the 50-day moving average, the 100-day moving average, and the 200-day moving average, with really this just waterfall sell-off, much quicker than what we saw in the late stages of 2018, mainly because this pandemic that we are seeing here with the coronavirus is multiplying at a quite substantial rate, and it is, 2 weeks ago it wasn't necessarily an issue in the United States. There were maybe a few cases, but now you're seeing almost every state that has a case or a multitude of cases in each state, and so it's really starting to become more of a domestic issue. Of all of these events that are being shut down, flights that are basically non-existent to Europe for the next 30 days. So it just continues to snowball on itself until we're trying to find that bottom. Where is it that we say, okay, we've got a grasp on it? We're starting to see the number of cases flatline. The deaths are going down. We're able to figure out the best course of action for people who have the virus, and really to hit that point. And I think that that'll maybe start to help support the market a little bit and keep it from tumbling. Right now, it seems as if the course of action is to just print money and then just chunk it at the economy and all these businesses and say, okay, here's our solution to help prop up the stock market at the moment. And while that can provide some temporary relief, I don't know if it is necessarily going to keep us afloat for a long period of time. So we'll go ahead and look at some levels here on SPY. It's going to be roughly the same as what we were seeing on ES, but just some different numbers. So here on SPY, we're going to be looking at, I'm going to actually scoot this down just a little bit. I would be looking here around the 258.70 mark. Now, again, these are just some arbitrary levels. We are, once again, moving very quickly up and down. I'll move into a shorter term time frame to kind of show you guys, because this 1 week's worth of trading, when you see it in this form, it's like, okay, this week's worth of trading. But when you actually break that apart and you see the up and down nature that we traded in for that week, it kind of shows a different story. But nonetheless, here around the low 258 mark, and then we also had right in here on ES, we'll be looking at 277. And then up here around the 292 mark is another spot that I would look at. But again, I'm not really super confident that we are going to be up near those levels. I would be personally erring on the side that we will be back down here testing this downward trend sooner than we'll be up here at 292. Now, I can be wrong. But that is just my personal opinion. We move it to the 4 hour. You can kind of start to, let's move it into the hourly is probably a better depiction. But here, just looking at this past week, scoot this back just a little bit. It was really just, decline after decline. But you can see it was, we would be up in the morning and then closing red. We would be opening green and then just met with a sharp sell-off and then a big rally, big sell-off, and then as we moved into Friday, it was declining. We actually broke down through that upward trend. It's kind of hard to show, but this is that upward trend line, this bottom line. We broke through it. We broke through the 250 mark, and then we rallied into the Friday open. Kind of sold off midday. Move it back in. We kind of sold off midday, started to rally back, and then we had this humongous close. And again, that was a lot in part due to Trump's address to the United States public, or really just the globe, as how the U.S. is going to kind of combat this issue internally, and then to help the globe resolve this issue. But that is really what helped to drive the market up. And you can see in that last hour of trading, we were up a good 5%. So while you're looking at this chart, and it may just look like a pretty basic chart, you kind of have to just kind of sit back and absorb what you're looking at. I mean, we are down here at lows of 240. These are levels that we haven't seen in a couple of years. And the fact that we were able to drop down from our highs around, I think it was around 339 here on SPY. Let me back it out a little bit. 339, and to be all the way down here, hitting 240, and then rallying back up in the late stages of the day, like literally the last 30 minutes, and seeing a 5% rally. That is just tremendous. Really gives you a good idea, or brings into perspective what we're seeing go on in the market at the moment. So, again, just some levels to look at down here around the low 258s. I would also be looking down here at this upward trend if you want to draw it on your charts, or just keep it in the back of your head that, yes, hey, we do have this decade, 11-year-long trend that has been going on, that we have bounced off of a few times in the past. Pretty infrequent when you look at the span of the span of time, but we did hit it, and I think that is important. So if we come back down there and we kind of bounce off it one more time, but we make lower highs, and then we start to see that break down, I think that'll be significant, and we might be moving to a much lower position here in the markets. But again, this is a pretty interesting circumstance that is going on in the market right now, with it being such a global issue and such a large issue, that we could see these swings continue for the next week, the next month. So really just stay on your toes and kind of understand what's going on, and have a plan in place, have stops in place, take profits in place for these big swings, so you don't get blown out, whether you're shorting or you're going long. But nonetheless, thank you guys for watching. I hope this video was somewhat helpful or beneficial in your trading. And once again, thank you guys for watching.